Yeah, sure. So first, let's just say that when legislation slows down on a macro basis, you start to see more regulation. So this week, the regulators said we're looking at changing the antitrust rules and the merger guidelines, and that process has started. And it was timed almost perfectly to what you're asking about. And that is the Senate Judiciary Committee successfully passed out of committee legislation where big tech will not be able to preference their own items. And if there's a theme between these two different buckets here, it's that big is bad. Anything that is big is bad. They classify who will be affected by revenues or market cap, number of users you have, and that seems to be where the attention is. This bill passed out of committee 16-6. That's within a 50-50 Senate, Kelly. So it shows you there's bipartisan support.
Wow.
But when you tally up the members and what their comments were yesterday, a majority of members still expressed reservations with this legislation. So it's got a long way to go in the Senate. There's going to have to be changes. This bill passed the House in June, very similar, and it's been stalled in the House ever since. And particularly California members are worried about their own companies being attacked. There's issues over U.S. competitiveness, issues over U.S. privacy, particularly with Apple, and then other types of more specific issues that will be dealt with on a company-by-company basis. But you can start to see this pricing in. Amazon's probably the most affected by this. It's down 6% in the last 2 days since this bill passed out.
Wow. All right. So you think this definitely is a reason for their underperformance. Let me ask you one. I don't know if you're the right person to ask or if this is even the right question to ask, Dan, but yep. I mean, is it legal to sort of regulatory-wise go after companies or deals because of their size and only for that reason?
Yeah, no, under existing antitrust law, which is pretty clear, being big alone is not a reason to do it. Even being a monopoly is not alone to do it. But you have to be abusing that market power for that deal to be there. Antitrust law is pretty clear. It's been there for 40 years. And what you're seeing on the regulatory side is that any deal really over $10 billion, no matter what industry. I know we like to talk about big tech,
right,
but this is affecting rails. It's affecting insurance. It's affecting airlines. It's unbelievable how big of an impact the Biden antitrust regulators already have had. And that's why you're seeing merger spreads widening out. You have multiple merger spreads in this $10 billion or more range that is double digits, and some of them are over 20%. And they probably would have went through under President Obama or President Clinton or definitely George W. Bush and Donald Trump. So something has changed here. It started to really change around the month of June. And it was this idea that once you get too big, not only do you have this kind of market power, but it starts to affect wages. If you look at the comments about the Microsoft Activision deal,
yep,
particularly Elizabeth Warren in the last couple of days, she's talking about how this would impact workers. That's something that's going to be a big focus in the merger guidelines that the Department of Justice and Federal Trade Commission start to release in late March.
I was pretty stunned to see Activision trading at such a discount to the $95 deal price. It's probably one of the biggest I can remember for a deal that the only reason anyone could come up with it not clearing is because of its size. You know, I didn't hear a lot of, figures cited about Microsoft's share in the gaming market. There's Activision, as you can see, still not moving much from when that deal was announced. So what would you tell investors here? If it takes a couple of years for Microsoft to close this deal or it doesn't even get closed, what's going to be the fallout from all this?
So you hit all the important points. You're going to have a widespread because of uncertainty. And Microsoft guided that this is going to take a year and a half to get through. Why would I want to sit there at a 15% spread and just sit there and waste my capital on that now? So as you get closer to those guidelines, I think you'll see the merger ARBs come in. But this would probably be a deal with a much lower spread if we didn't have the events over the last year in terms of this. But I want to be very clear here. Antitrust allows you to go to court. AT&T was challenged by Donald Trump. They went to court and they won. It's a really beautiful process. The goal of the regulators is to extend this process out, threaten court and say, if you're going to be in, you got to be in for 18 to 24 months. That's going to be the threshold for companies. Are you willing to go all the way to the end to be able to do this? And that's a different hurdle now for deals because they're not going to change the law in this specific area. One other big point that you just referenced, though, when Google announced its merger of Fitbit, every single antitrust senator and congressman that you see out there passing this bill criticized that deal when it happened. Kelly, they were awfully muted. when Microsoft announced its deal this week. And I think that is something very, very interesting because it's telling us that Microsoft has basically laid down some of the groundwork and have more political support. They're viewed as the good guy relative to some of these FANG names that are viewed as the bad tech.
Very,
it's
very
real big.
Yeah.
Microsoft is bigger than them, but they're the good tech at this point.
I know. And now we think Fitbit. I mean, it's so small. Why would anyone even care? Dan, it's a great point. Thank you so much. It's good to have you today. Dan Clifton joining me from Strategas.